cheapest products. The supermarket knows this, and they will tailor their offering to maximize my spending. My behavior is driven towards maximizing my pleasure within my budget constraint. When I do so, it gives me a sensation of well-being. Financial market bargain. When I see the FTSE index falling in price during the day, my mind associates falling prices with value and becoming cheap. If I act on the impulse, one of two things will happen. 1. My feeling of value is confirmed. The market begins to rise. 2. My feeling of value is not confirmed. The market continues to fall. My argument is perhaps provocative, but no matter what happens next, I will end up losing, even if I win on the trade. If I buy with no good reason other than my mind sending me an impulse to say the market is cheap, I will lose if the market continues lower. And why would the market not continue lower? That is the premise of technical analysis. Trends persist. The market suffers from inertia, meaning that whatever it is doing now, the odds are above 50% it will continue to do. If I buy and the market begins to rise, I will eventually lose anyway, because I have now taught my mind that it is okay to stick my hand out and catch the proverbial falling knife. I have created a pattern in my mind that associates buying falling asset prices with pleasure, because I had success with it at some point. As a side note, when I began taking trading very seriously, I would review my trades when the day was over. I would print out the chart and plot my trades onto it. I realized that some 8 out of 10 trades were impulse trades. I began to become much more conscious of my trades. As I proceeded down that path, I became more and more profitable. The fewer impulse trades I had, the more money I made, and the more satisfaction I derived from my job. Self-analysis. Through analysis of my trading behavior, meticulously logging my trades on a chart after the trading day was over, I came to the realization that I was a prolific value trader. I would repeatedly short rising markets. I would repeatedly buy falling markets. It helps me to remind myself daily that when I am buying, someone else is shorting or getting out of a long position. A significant factor to my trading success, going from being a losing trader to a winning trader, was the realization that there are no bargains in the financial markets. Supermarket substitutes. When I am shopping for something in the supermarket and I discover a product has gone up in price, or a product that used to be on offer is no longer on offer, my mind will associate this with pain. My mind will direct me towards a substitute. This is perfectly rational human behavior. My sister and I laugh about this phenomenon. She lives in Germany and frequently travels with the airline EasyJet from Berlin. She puts it so eloquently when she says, "I will get up in the middle of the night for a 5 a.m. flight if it means I can save myself 25 euros. I think many of us can recognize this trait. Financial market substitutes. If something has gone up in price in the financial markets, then it means there is a demand for it. It may seem expensive, but it merely reflects the equilibrium point between buyers and sellers. I struggled with this for years. I argued it was expensive, and this faulty view was compounded by the technical indicators I was using. Indicators like stochastics would suggest a market was overbought or oversold. Those are other words for cheap and expensive. It is for this reason I am no longer trading with any kind of technical indicators. My charts